Can you place good currency trades just using currency strength indicators? Well, let's talk about it. So good morning, guys. It is Thursday, April 1st, 2021. It's 10:40 a.m. New York time. And something a little bit different here I want to talk about. I made a video similar to this. I don't even know. I'd have to go back and look, probably at least a year ago. But anyways, what I wanted to talk about is looking at the individual currency's strength in real time versus looking just at a currency pair. I mean, if you go over to your chart, and this is just, this is a demo account here. If you go over to your chart, you can go through and you've got all these pairs down here, as we know, okay? And you can sit here and look through, 20 plus pairs and, look at the news and try to figure out which ones you want to trade just based on maybe patterns or what's going on in the news or sentiment, what have you. And that's all fine. You know that's what we primarily do on this channel and what we do in trading. But here's something else that you might want to look at. Now, you can't do this on MetaTrader, what I was just showing you. This is TradingView, and a lot of people use TradingView. Some people don't. And you might be able to do this on other platforms besides TradingView. This, I'm not familiar with them all. But this is TradingView. Now, TradingView, if you're not familiar with it, is an incredibly rich platform. Now, there is a free version, and then there are paid versions. Now, I don't know if you can do this on the free version because the free version just has limited things that features that they give you because it's a free version. So this is the paid version. And you can usually get the paid version if you wait for a special. This is the Pro, which is, I think, the first level paid version. And you can get it for, like, when they have it on sale, they'll do like a 50 or 60% off a couple of times a year. You can get this for, $80 for the year or something like that. And they have higher levels too. I don't need anything beyond this. So I'm not here promoting TradingView. I'm just telling you that you may or may not be able to do this on the free version, but you can go to TradingView, sign up for a free account, and see if you can do this. And if you can't, then if you want to try to trade like this or look at it, then you're going to have to either find another site where you can do this, or you're going to have to pay for it. So it's kind of an investment, but it's not a big investment. So anyways, so what we're looking at here, first of all, and we're on a 15-minute chart, but you can look at any time frame, obviously, up here. We're looking at the line chart of all the 8 major currencies. So the Kiwi dollar, the Japanese yen, British pound, Australian dollar, euro, Canadian dollar, US dollar, Swiss franc. Okay, these are the 8 majors. Okay, and they're all color coded. It tells you what colors they are, and they put these nice little labels off to the side here too, so you've got them all labeled too. So I know this is the British pound, and the ZXY is the New Zealand dollar, and etc. Okay, and what you're looking at here is basically just the how these currencies are moving against each other right now. And what you're looking for to potentially trade this is you're looking for a lot of divergences. You're looking for one currency moving strongly against the other one. Now, these can be day trades. They can be long-term trades, depending, what time frame you're looking at. This happens to be a 15-minute chart, which is a little short for my taste, but I just wanted to show you that they are moving. And you can see these little lines adjusting and the labels moving up and down. The market is open right now. So for demonstration purposes, I'm going to go up here. I'm going to jump up to the 1-hour chart here and show you a couple of things. So what you're looking for are these big spikes, like right here, and we can look at this one on a MetaTrader chart. So this blue line, this is the New Zealand dollar. So this is back on March 22nd at 1700 hours. So this is about around market changeover. So I'm not sure how good this will be because this was at the close of the New York session, but let's just look at it. I'm going to write this down. 3:22, 5 p.m. Now, so you can see it's going down. So let's find one that's going up at that time. So we have this, which is the dollar. Okay, so let's go look at the New Zealand US dollar currency pair at this time on this date, and let's see what we get. And if this is right, we should see the Kiwi dollar heading down. Okay, so let's jump over to the Kiwi dollar. All right, and we're going to go to a 1 hour chart, and we're going to and what did I say, 322 at 5 p.m. So let's find 322. Okay, so 322 5 p.m. on this time, because this platform has a 5 p.m. close, so that would be the 0 hours, the beginning of a new trading day. So it's right here, and you can see what happened. The market was trading down here. We had a little bit of a rally back up, about 38 pips, and then look at this huge drop. Okay, all right, so there's an example right there. Let's see if we can find another one here, maybe at a better time of day. So let's look at the Swiss franc. What is this? Yeah, the orange one's the Swiss franc. Let's look at the Swiss franc, because this also moved at that time of day, but I'm trying to find maybe a better time frame here. Let's go to the 4 hour chart, see if we can see anything here. Okay. How about if we look at the let's see. This is the Kiwi again versus the US dollar again. Okay, so this is another move. So this was on February 25th, again around the market changeover. So let's go back to Kiwi dollar and look at February 25th. And we're probably going to have to zoom out a little bit here to see that. February 25th. And you can see that's right about here, and you can see the market definitely came down. We had a push back and then back again. All right, so you get the idea. Now, a couple of things to remember. What you're looking at right now, and we're back on the 1 hour chart, and you can see a lot of these currencies right now are just kind of moving, sideways. There's no real big action. These are all kind of just moving, parallel to each other. There might be a little bit of overlap, but there's really not a lot going on. Okay, what you're really looking for are sharp divergences where all of a sudden one will kind of move really against the others, up or down. You see a sharp push up where they start cutting through other ones, or a sharp move down, like you see here on the Kiwi dollar, like we were just showing you on the charts. Okay, and now the Kiwi dollar is kind of leveled off, and is it going to go back up or is it going to continue down? I don't know right now, but you can see what this does, guys, is instead of having you sit here and go through 20 plus charts and try to figure out what's causing the move, you can go here and you can just kind of examine each currency in isolation, and get an early feel for a particular move. And you'll find that unless you're trading on a short time frame, you'll find that once these actual spikes happen, they continue for quite a while. I mean, we saw it on this Kiwi dollar. I mean, look how long this move went on. This was it. That was this first one we looked at right here. I mean, this is an hourly chart. This down move went on for 86 hours. So what is that? In trading days, that's 3+ trading days. This downtrend went on, and this is only an hourly chart. And obviously, again, like I said, you can do this on any time frame. And you can go to the daily. You can find these moves here. So you can really do whatever. I don't know why these lines are on here, only on this chart. Okay, and you can see these divergences happening all the time. Okay, now sometimes they're not always just going to cross each other, and you just want to look for divergences. And when you're trading on a high time frame like the daily, then what you're looking for is stuff like this, where you've got the Australian dollar in a long-term uptrend, the US dollar, like back here. Okay, so this was back in November of last year, where you saw the Australian dollar and the Kiwi dollar moving up, and you would have wanted to pair that against something like the US dollar. So now it's kind of flipped over. At the time, the U.S. dollar was heading down. Okay, and this would have been, this would have been the divergences you would have wanted to have traded, to either have them divergent or something neutral. So to trade like the Aussie or the Kiwi against either the dollar or the Japanese yen, which was kind of moving sideways and did eventually move down. Okay, and maybe avoid trading these against the euro at the time, which was kind of also moving up, and also these three. Okay, this was the pound, the Swiss, and the pound, the Swiss, and the Canadian dollar were all kind of moving up at the same time. So the best way to trade at that time was to trade these two against one of these two. Okay, so on a long-term chart, this is probably what you're going to see, because you're not going to see these giant spikes, because this is a daily chart. It just takes longer for things to unfold. So this would be more for like what I would call investing versus, day trading. So where if you wanted to go down to the 4-hour chart, maybe a good, halfway in between, or down to the 1-hour chart, this would be more like day trading. And this is what you're looking for. Okay, so you have to, this is what you have to look for. But like I said, guys, you will find that even on an hourly chart, that when these moves happen, they tend to go on for a while if you've picked a good one. Now, if you're just trying to trade noise, like, right now, okay, the British pound looks like it's up a little bit. So you say, oh, I want to trade the pound against the dollar because it looks like the dollar is heading down. The pound, okay, I don't know if I would do that. This is more kind of noise, unless you see a really big shift here. I mean, you could. Maybe you scalp a few pips. Maybe you go look at the chart. So let's look at the chart right now. Okay, we'll do that. So this is the pound. Let's look at the pound US dollar chart right now and see what it's doing. Where are we here? Right here. Okay. So here's the pound versus US dollar. It is up. Okay, but it's not like rocketing up here. But it is up. So if you had, you might be able to take this on a scalp and, take a bunch of pips on a scalping trade. So it's just it all depends on what your time frame is, how long you plan on being in the trade, and what your risk, what your risk is. And like I said, guys, you can do this on any time frame. Just again, like anything else, the shorter the time frame you go to, the more noise there's going to be, and more potential you're going to have whipsaws, and you're just basically trading noise, and the higher chance you're going to be stopped out if that's not a sustainable move. So on TradingView, all you have to do is, if you have this, you just want to go to compare. You click this compare, and then you're going to put in these symbols. You have SXY. You can see them all on the screen here. SXY. The US dollar one's a little different. There's a couple of US dollar ones. I'm using the FXCM, Dow Jones FXCM index, which is, I think, weighted a little better. But there are other that you can use, the DAX. Which is another dollar index, but I like this one. And then the rest of them are all just XY, BXY, CXY, EXY, AXY, JXY. All right, and there's your 8 indexes. And then I have them set as line charts. Okay, if you go into your settings, you just put it as a line chart, leave it to close, leave it, as simple. You don't need to change any of this other stuff. Obviously, put whatever colors you want. It's going to automatically assign a different color for each one when you drop it on your chart, but of course you can go in and change it to whatever you want. Then I would just leave it all like that. Just leave it as a line chart, because this is what you want to see. Okay. All right. And so once you do that, this is what you're going to see in your chart. And I can get rid of this little pane here so I can just see it opened up a little bit more. The other thing to keep in mind, guys, is these markets, other than the US dollar, these index markets are only going to be open during New York trading hours. Okay, so basically the New York stock market hours, like, I don't know if it's 8 or 8:30 until 5 p.m. So at night during the Asian, well, night my time, during the Asian session, these are not going to change. Okay, they're just going to stall out and stop. And when you put your cursor here, it's going to say 1700, which is 5 p.m., and that's where it's going to stay until the market reopens the next morning. So you cannot really use these during the Asian session, unless maybe you're going to use the daily chart and you're just going to, continue to, take a long-term approach to some divergences. But if you're day trading this, you have to do it during the New York session. or the New York hour. It's not just the New York session. That overlaps with London too, with the second half of the London session and then the whole New York session. Okay, but you really can't do this during the Asian session because these are not open. The dollar index will update, and I have to look up the exact hours. But essentially, guys, but that's not going to really help you because it's only one. So essentially, guys, this is something you're going to use during the second half of the London session and the New York session. Okay, which is from a volume and liquidity standpoint is the most active part of the day. Anyways, I don't recommend, and I don't take a lot of trades during the Asian session because it tends to be counter trend and the volume's a lot lower, and a lot of times you're going to see those trends reversed during the London and Asia and New York sessions. Okay, so just keep that in mind that if you go and look at these, during the Asian session, they're not going to be updating. Okay, but we're in the live market right now, and so they are updating. And again, here on the hourly chart, you can see these are all kind of pretty neutral right now. They're all kind of just moving sideways. There's no real price action right now, and if you go and look at the charts, you probably see some little blips up and down, but you're not seeing any real super impulsive moves at the moment. Now it doesn't mean you can't trade, because like I said, if you go to a 15-minute, it's a little bit more active, okay, like anything else. So here you do have some potential divergences. On the 15-minute, you have the pound going up and the dollar coming down. So we already looked at that chart. You got the Kiwi heading up. Even though the Swiss franc and the yen are pointing up, they've been really hit hard. So I probably wouldn't consider these really going up. Obviously, this is stack ranking them based on percentage change and where they currently sit. And so this scale is really not so important. It's just more, what are the divergences between these lines. So, all right, so be careful, because like I said, I know the tendency is you see something jumping and you're like, oh, I just want to jump in. I see something moving and you just want to jump in. Just be careful. Go to the chart and look. And again, like anything else, you want to try to find a good entry and exit point, and a careful risk assessment and stop loss placement. But this is just another way of doing this. Like I said, guys, because in a glance here, you can just look at 8 lines, and in a matter of just a few minutes, you can really just get a good feel for whether there's anything actively going on. And again, depending on what your time frame is to change, whether you're a scalper or a day trader or a swing trader or a long-term trader, you just adjust your time frame accordingly, and that's it. So like I said, here on the 15-minute, we see the Kiwi heading up, the dollar heading down, and I think did we already look at the Kiwi dollar? Yeah, well, we looked at it. We looked at it in hindsight. Well, let's look at the Kiwi dollar right now, what it's doing now. And let's see here. And you can see it is up because, again, we see the Kiwi pointing up and the dollar kind of tilting down a little bit. This is not a big move on the dollar. The dollar has been very strong. Obviously, it's been on top of all these. So, I wouldn't say this is probably anything but noise right now. Again, this is a short time frame, but if you were a scalper, you could maybe consider taking a long on this, and you can see it's been going up now on this time frame for pretty much all day, even since back at the beginning of the London session, this started moving up. So although again these indexes were not open at that time, you had to wait until 8:30 New York time before you would have seen these moving. But still, you would have had some opportunity. So this is what I'm talking about, because a lot of times you're looking at the chart, you're like, well, if you're seeing a move, yes, you can go to the news and figure out what causing the move, but it's a lot of jumping around, because if you see the dollar Canadian moving up, let's just say, I'm just picking something, dollar CAD's moving up. Okay, well, is it the dollar that's strong, or is it the Canadian weak? Is it both? What's the deal? And yeah, you can go to the news and try to figure out what that is, but you can come here too and you can just look at these line charts in isolation and say, okay, I can see which one is moving. And then you can maybe strategize better, like, okay, well, maybe I want to take the dollar CAD trade, maybe not. If it's the dollar that's moving, maybe I look at some other dollar pairs, and and maybe try to find one that's better, that's got a better divergence spread, versus the dollar CAD. I don't know. It's just something to think about. Just as we're sitting here talking, you're watching the British pound and the dollar approaching each other. These cross over, again, that makes a little better case for the pound US dollar, to go long on the pound US dollar. Again, this is a 15-minute chart, so I'm not saying that's a long-term trade, but it's just something to look at. So I just wanted to show you this, guys. And again, you can't do this on MetaTrader because they don't have, I don't think most MetaTrader, any broker that has MetaTrader, you might be able to get like the US dollar index, but I don't think you're going to be able to find all the indexes where you can overlap them like this. You're going to have to use something like TradingView or some other platform, and there might be other ones you can do this that I'm not aware of. I don't know if NinjaTrader or CTrader or any of those other ones, because I don't use those. But I have this subscription to TradingView that I use as a secondary to my MetaTrader. And I actually can trade on this on my live account. I can actually link which is one of the nice features about TradingView. You can oftentimes, I don't think you can do it for every broker, but you can connect your live broker account to your TradingView platform, so you can trade right on here, and you don't even have to use MetaTrader at all. You can do everything on here. I still like MetaTrader. I'm still kind of nostalgic to it. And quite frankly, like I said, there's so much stuff that TradingView does, and it's great if you like all that, but I don't really need all of that. I just still like the simplicity of MetaTrader for how I trade. It has everything I need. But there are some things on TradingView like this that you just can't get on MetaTrader. So that's what I wanted to show you guys. Just another way of, I guess it's just another way of looking at the market, whether you actually want to trade like this or not. But it's another way of kind of analyzing, currency strength. And again, the key is in any trade is to trade weak against strong. No matter what pair you're trading, you want to trade the weakest against the stronger, or stronger against the weakest. That's where you're getting your move. If you have two strong currencies or two weak currencies at any given moment in time, if both of them are strong and both of them are weak, if you go and look at that currency pair, the chart, it's not going to be moving. There's going to be a lot of wicks. It's going to be a lot of sideways price actions, consolidation, because they're both strong or they're both weak, and that's just the way it is. You want diverging currency strength, and this is one way to look at it. Again, whatever time frame you choose to trade on, that's going to be a big determinant about how long you're going to hold these trades. If you're taking this on a 15-minute chart, I would strongly recommend that you just do it as a day trade, unless you're getting the same view on a higher time frame. If you're taking it on, let's say, an hourly time frame, and you see a big move, that one you probably can hold for 1, 2, 3, 4 days. And obviously, the higher up you go, the longer those signals are valid for. Okay, and that's just like any other system, right? It just depends what time frame you like to use, how long you're probably going to hold that trade. All right, but anyways, guys, I guess I'll leave it there. Take a look if you have access to this. Go take a look at it. Like I said, you can get a free TradingView account. The basic version, I just don't know, like I said, if you can do this on the basic, because they limit the number of indicators and things you can do. These are not indicators, these are actual line charts. But I just don't know if that feature is going to be completely active, and it really needs to be to do this the right way. Okay, but check it out, and just think about it. And like I said, even if you don't trade this way, it's really nice to be able to just kind of have this view of what the market is really doing and what each individual currency in isolation is doing, and not just always looking at it as a currency pair and not really knowing what is actually moving that without a lot more clicking around. And this lets you do this basically in a very brief amount of time. And you can back test this really easy. I mean, just go back and look. Just scroll back on these charts and go back and look at these moves. Pick out a big spike up or down, like in here. This goes, again, we already looked at this, and go back and look at it and see what you think. So anyways, guys, as usual, just Please like the video, leave any comments or questions below. If you're just finding it for the first time, hit that like, make sure you hit the like button, please, and subscribe to the channel. Hit the bell notification so you get notified as soon as I post a new video, and which is, like I said, a couple of times a week. And I appreciate you watching. I hope everybody has a good rest of the day, and we'll talk to you soon.